Hello everyone, and welcome back to Explain the Charts. Today is October 23rd, 2025, and we are taking an in-depth look at Meta Platforms, ticker symbol Meta. The stock finds itself in a fascinating position, caught between a flurry of conflicting news reports that create a complex picture for investors. On one hand, we're seeing headlines about Meta laying off 600 employees from its AI unit, which some reports describe as bloated. This suggests a push for efficiency and cost-cutting, a theme that has rewarded the stock in the past. However, on the other hand, Meta is making monumental investments in its AI future, highlighted by a massive $27 billion data center deal with Blue Owl Capital. This signals an aggressive, long-term commitment to AI development, which many analysts are cheering on. In fact, despite some recent choppy price action, analysts from major firms like Morgan Stanley and BofA remain overwhelmingly bullish, citing advertising strength and the long-term AI roadmap. All of this is happening just before Meta's crucial third-quarter earnings report, which is scheduled for October 29th. This earnings call will be a major catalyst, and the market is clearly holding its breath for new guidance on expenses and AI progress. So we have a classic battle between short-term concerns about spending and layoffs and long-term optimism about AI dominance. Let's turn to the charts to see how this narrative is playing out in the price action. Looking at the daily chart, we get the bird's-eye view of Meta's journey over the past year. The most prominent feature is the all-time high set back in mid-August of this year, right around the $796 level. This price is now the single most important long-term resistance level for bulls to overcome. Following that peak, the stock entered a period of correction and consolidation, falling about 5% through September. We can see a significant support zone was established in the $700 to $710 range during the sharp sell-off in early October. The price bounced hard off this level, which also coincides with the bottom of the massive earnings gap-up we saw on July 31st. That previous resistance around $700 has now clearly become a critical floor of support. From that early October low, the stock has been in a recovery mode, climbing back to its current price around $733. Before that drop, the price spent the better part of a month trading sideways between roughly $740 and $780. This indicates that the $740 level is the first key area of resistance to watch on the upside, as it was a former support level during that consolidation. Currently, the stock is trading below that level, suggesting it might be a tough barrier to break before earnings. The volume has been relatively average over the past few weeks, which is typical during a consolidation phase as the market awaits a clear catalyst. Let's zoom in on the daily chart to focus on the price action since the last earnings report at the end of July. Here you can clearly see the massive gap up from around $700 to $775. This was followed by the push to the all-time high of $796.25 on August 15th. The subsequent pullback was choppy but orderly until the beginning of October, when we saw that sharp dip down to test the $705 level. The rebound from that low has been impressive, showing that buyers were eager to step in at that price. Over the last 5 trading sessions, Meta has put together a nice rally, but it appears to be stalling just below that key $740 resistance area we identified. Now, switching over to the 1-hour chart, we can get a better sense of the short-term trend. From the October 10th low, we can draw a clear ascending channel, with the price making a series of higher highs and higher lows. This is a textbook short-term bullish structure. However, you can see that over the past few days, the upward momentum has slowed significantly. The price has been rejected multiple times from that $738 to $740 zone, which confirms its importance as a short-term resistance. The bottom of this recent range is around $724, which now serves as immediate support for intraday traders. A break below this level could signal that the short-term uptrend is losing steam and could lead to a retest of lower levels within the ascending channel. For now, the price is coiling between these two levels, building energy for its next move. Finally, let's drill down to the 15-minute chart to see what happened in today's session. Meta opened strong this morning, pushing right up to challenge that key $740 resistance level. However, it was met with significant selling pressure at the high of $740.60. From there, the price reversed sharply, falling nearly $17 to an intraday low of $724.03. This is a bearish intraday reversal, often called a failed breakout or stuff, and it shows that sellers are actively defending that resistance. Since that sharp drop, the price has stabilized and is now consolidating sideways around the $733 mark. This price action tells us that neither bulls nor bears are in firm control right now. Traders are essentially in a wait-and-see mode, likely hesitant to place large directional bets just days before the earnings announcement. Bringing it all together back on the daily chart, let's outline the potential scenarios heading into and out of earnings. First, the bullish case. If Meta delivers strong Q3 results and provides positive guidance on its AI monetization or ad revenue, we could see a powerful breakout. A decisive close above the $740 resistance level on high volume would be the first bullish signal. This would open the door to a move towards the next resistance zone around $780 and potentially a retest of the all-time high at $796. Given the positive analyst sentiment and the stock's history of strong earnings reactions, I'd place the likelihood of this scenario around 55%, contingent on a solid report. Now for the bearish case. If earnings disappoint, or if Zuckerberg's commentary on future spending spooks the market, we could see a sharp move down. A break below the immediate support at $724 would be the first warning sign. The most critical level to watch would be the $700 to $710 support zone. A close below $700 would be technically very damaging, as it would break the bullish structure from the last earnings gap and could signal a deeper correction. The likelihood of this scenario is around 45% and would be reinforced by weak guidance or a broader market downturn. So, let's quickly recap the key levels and what to watch for. Major long-term resistance is the all-time high at $796. Key short-term resistance is at $740, with another level at $780. Immediate support is at the recent low of $724. And the most critical, must-hold support zone is between $700 and $710. The main event is the Q3 earnings report on October 29th. Expect volatility to pick up significantly around that date. Look for a substantial increase in volume to confirm the direction of the post-earnings move. And finally, a brief disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. Trading and investing involve significant risk, and you should always conduct your own research and consult with a financial professional before making any investment decisions.